Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Jay Soloff. He's a lead options analyst over at Investors Alley. We're going to discuss how you can potentially take advantage of the high levels of volatility as a trader and as an investor. Jay, it's great to have you with us. Welcome to Trade Talks.
Thank you. Thanks for having me.
Before we get into strategies, let's talk about some of the market volatility trends that you're seeing in the Nasdaq 100 Volatility Index, or what we call VOLQ. We can also touch on VIX. Are you surprised at the current levels at where volatility is trading right now, or do you think they're relatively in line with what we're seeing in the broader market?
That's a great question, because you see a lot about, is the VIX at the right level? Is the VOLQ at the right level? And I think it is. Honestly, if you look at, there's a couple things that impact implied volatility. Some of it is, of course, forward looking, what's coming up, but you can't ignore backward looking. You can't ignore what's been happening. And if you look at, VOLQ is around 35, I think, but before I got on here. And if you look at realized volatility in the Nasdaq 100, it's right around there. That's what it's actually been doing, around a little over 2% per day on average moves. And, I don't think that an implied volatility index is going to be too far from what's actually going on historically. You have to look forward as well, what's coming up. And that's certainly an issue with, the FOMC meetings and things like that. So there's enough to keep it higher from a forward-looking basis, and there's reason to keep it higher from a backward-looking basis. So I would say it's pretty well priced.
So, Jay, I realize it's hard to forecast in this environment, just as you had alluded to, but when you think about volatility expectations through the end of the year, do you think we will look similar to the environment that we're in now? Or as we get through earnings, midterm elections, and we go into the seasonally strong holiday season, it might fizzle out a bit here? It seems as if 2022, we say this every year, has been quite unusual.
Yeah, and I think you hit on all the stuff that we need to get through. I think the biggest one there is the November FOMC meeting, but earnings, as you say, extremely important. The midterm elections maybe not as important as it's been in the past, just because there's only so much that can change. But yeah, I do think when we get to what would traditionally be the Santa Claus rally, that could very well happen, and we could see volatility, barring any surprises from the Fed or some geopolitical event. I wouldn't be shocked to see volatility finally come down a bit in December.
Yeah, and we discuss this all the time with option strategists, that you can make money, you can position yourself for a number of market scenarios using option strategies. So how can you potentially take advantage of the high levels that we're seeing as a trader and as an investor?
Yeah, and again, that's a question I get all the time, and I think it's more tactical, certainly when volatility is higher. Maybe finding a short volatility trade that works in something stable. Stable as in low downside right now in something like oil or natural gas. But if you want to be more strategic, being short volatility is essentially a proxy for owning stocks. So you could do something like the SVIX is a short volatility ETF, and just throw that on now with the idea that at some point volatility is going to come down. So I think mostly tactical, but definitely some strategic stuff if you're willing to be patient.
All right, Jay, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.